Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 27, 2025, and we're diving into the latest earnings report from Alliance Resource Partners. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Alliance Resource Partners has just released their third quarter financial results, and there's a lot to unpack, from revenue figures to strategic investments and future guidance.
Revenue and profitability overview. Let's start with the top line. Alliance Resource Partners reported a revenue of $571.4 million for the third quarter of 2025. John, how does this compare to previous quarters?
While the revenue decreased by 6.9% compared to the same quarter last year, it actually increased by 4.4% sequentially. This growth is primarily driven by higher coal sales volumes and prices. Net income also saw a significant jump of 60.1% from the previous quarter, reaching $95.1 million.
And what about their earnings per share?
The EPS came in at 73 cents, beating the forecast of 67 from two analysts. This is a positive indicator of the company's profitability, reflecting reduced operating expenses and higher investment income.
Operational efficiencies and future outlook. John, can you elaborate on the operational efficiencies that Alliance Resource Partners has achieved this quarter?
Absolutely. The company sold 8.7 million tons of coal, marking a 3.9% increase year over year. The Appalachia segment in particular saw a significant improvement in EBITDA expense per ton, which decreased by 11.7% year over year. This is largely due to increased productivity and better mining conditions.
And what about their strategic investments?
Alliance invested $22.1 million in a limited partnership that owns a coal-fired power plant. This aligns with their strategy to support energy infrastructure growth. Looking ahead, they've tightened their guidance for the fourth quarter, expecting steady operational execution and cost improvements.
CEO commentary and strategic initiatives. Let's discuss the CEO's commentary. What insights did Joseph W. Kraft III provide about the company's performance and future plans?
Joseph W. Kraft III highlighted the strong operational and financial performance, noting that their infrastructure investments are beginning to pay off. He mentioned that the domestic thermal coal market is experiencing strong fundamentals, supported by federal energy policies and demand growth.
What are their plans for future production?
Kraft indicated that Alliance is well positioned to increase production at Tunnel Ridge and the Illinois Basin operations in 2026, driven by improving market fundamentals and their completed capital program.